Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, Jim. Thanks for having me.
Chris, what's the U.S. dollar doing, and how's that going to affect things?
Yeah, well, the U.S. dollar, ever since they started doing the fiscal stimulus plans and printing like it's going out of style, we've seen the U.S. dollar just starting to free fall mode. The last 4 months, it's been trending lower. And as the dollar collapses, usually we see commodities kind of rise in value, especially with precious metals. And that's one thing we've been watching for a long time, is when the U.S. dollar price trend does roll over, that's when we're going to see the big move in the precious metals sector. So that's what we're dealing with now, is that dollar broken its uptrend. It's headed lower. We've seen gold miners and silver in the last month and a half, couple of months here, break into a new bull market. So it's pretty exciting times for those metals and commodities.
Are the immediate good times going to continue for gold and silver?
Well, that's a good question. The charts are saying that we're seeing exhaustion in price action. When you look at gold, when you look at silver and miners, they're actually showing signs of weakness. We're seeing increased volatility, meaning we saw a couple big sell-offs in silver, miners, and gold about a week and a half ago. And the rebound here is a very bearish type of pattern that's forming. It's a bear flag, which means once this little bounce and this move higher ends, well, probably this week, I think we could see another leg down to go below last week's low price for both gold, silver, and miners, actually. So, and the dollar is trying to put in a bottom. It's getting very oversold here. When the dollar bounces, that's naturally going to want to pull precious metals down. So it's going to be very interesting. The setup seems to be playing out very well here. This week, I'm expecting a top in precious metals, only short term, only for a week or two, and then I think it could find a bottom, and precious metals could continue to go higher. But short term, definitely looks like they're struggling here.
Right now, I know in the stock market people say buy the dips. Is that the same case now for precious metals?
I believe it is. There's a couple different angles. It really depends on the time frame you're trading, but in reality, gold, silver, and miners started a bull market. They're fresh, new bull markets. So any pause, so any even sideways price action or pullbacks, the dips, can be bought because they should continue to rally long term here. That being said, if we see something similar that happened in late 2007, early 2008, which was the stock market was getting very toppy, precious metals took off, and gold miners, they rallied and outperformed the rest of the market. This is exactly what we're seeing right now, the last couple months going forward. So it feels like we could be walking into the same type of storm or similar storm as 2008, where if the stock market does roll over and start to sell off, the broad market selling, where people have to liquidate everything, they become very fearful and they sell, clear out most of their portfolios, that is going to pull precious metals and miners down, or at least trade them sideways for a while. Now, this environment does favor, I think, precious metals more than it did in 2008 because of the stimulus and the Fed willing to do whatever it takes. So as things get worse, I think we could see the precious metals market pull back, but I don't really see it crashing because the worse things get for the economy, the more stimulus is going to take place, which should help support the precious metals prices.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's the strategy for dealing with the stock market right now?
Well, the stock market, man, it's really pushing everyone's fear of missing out level. People are really feeling forced and squeezed to get back long equities. You know, the 10-year treasury yield's so low. Markets are hitting new highs for stocks. So people are really feeling the pinch and moving back into equities, which, I mean, they are in an uptrend. They've kicked back to an uptrend, but everything on a technical standpoint, other than the trend, when you look at market sentiment, the market internals, how many stocks are actually supporting this market, like the NYSE, the amount of stocks trading above the 200-day moving average is less than 50%. So stock market's making these crazy new highs, and there's fewer stocks. Less than half the stocks are really trending up. So when this market reverses, it's going to be a lot like February, where I think we're going to see a big gap down and a very sharp drop that could catch people off guard. We got a taste of this back in, I think it was June 11th. We saw the stock market fall about 6-7%, depending on the index, in one day. So the market is setting up for that again, where there's just so much everyone's stretched to the upside. The market has become very brittle, very low volume, not a lot supporting it. And you can see this in the total put call ratio. If you take a moving average based on the opening price, value, we're seeing levels of people buying call options expecting higher prices with lots of leverage at a level we've never seen before. Similar levels were in 2018. The market fell 20% very quickly. And the time before that was 2007 when the stock market put in a top. So we're reaching this critical level where I think there's a ton of risk to be just piling in to stocks. And everyone I talk to who's not really into the financial markets, but they invest, they're all talking about stocks, how they just put more money into the stock market. And it makes me cringe just thinking all these people are dumping in an extra 5 or 10 grand when, I mean, this market is just so brittle, and I'd rather miss out on gains than take a 20 or 40% haircut. So you gotta be really cautious at this point.
Are people willing to finance that money because interest rates are so low?
Oh, probably. I mean, I would never trade money on trade with borrowed money. Trading is a very tough sport or business, whatever you want to call it. You're trying to predict the future. So I don't ever take leverage kind of money in that way, but I know tons of people do, and lots of people are dumping money into it, and it's a dangerous play. I mean, it's just something you shouldn't be doing, especially at these levels. Maybe if the stock markets, say we just had a bear market, which I don't think we have, I think if we were starting a new real bull market where the economy is actually flushed out and things are starting to turn and the stock market's finally starting to turn up after a big decline, then getting into the stock market with potentially borrowed money is actually a much safer bet. There's tons of upside potential. Dividends will be much higher then, but at these levels, it just makes me cringe to do that.
We'll have more with Chris Vermeulen right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, California is seeing rolling blackouts due to a power shortage and a giant heat wave. Does that increase the demand and the price for natural gas?
Oh, it could. I mean, there's been some incredible heat waves. I've got a partner in California. He said it was 112 there yesterday, and the air conditioners can't even keep up. It's scary, and he's got power, and he's sweating to death. So I can only imagine. I mean, we've seen natural gas have a very big rally in the last about 3 or 4 weeks here. I mean, it's gone from about $1.60 to $2.40. So very big rally. Natural gas is actually putting in a multi-year cycle low here. If you were to zoom way back on the charts to pretty much 2007, actually it goes all the way back to about 2004. Every few years there's a very significant standout low on natural gas, and it kind of drags out and gets a little longer each time. And we're literally putting in that major low right now and just starting to come out of that kind of bear market for natural gas. So I think there's actually quite a bit of upside potential for natural gas going forward. The problem with natural gas is how do you trade it? How can you profit from it? Because all the ETFs that are trying to mimic the price of natural gas have huge flaws. They have contango. So even if natural gas trades sideways or keeps moving up slowly in favor of what you're expecting, that ETF will actually lose value faster than the price of that natural gas is going up. So it's very tough to play these major trends. The natural gas has to be traded as a short-term move, but it is known as like the widowmaker because it can move 5 to 8% back to back very quickly, and it's weather-based. It's kind of news-driven. So it's a tough one to take advantage of. But I think natural gas overall over the next couple of years will be higher prices from here.
What's going on with oil?
Oil has been creeping up. It just continues to rise. I think the falling dollar may have a little bit to do with that. But overall, it really is just kind of grinding its way higher. I think it's waiting for some type of bad news because I think there's a lot of momentum traders that got into crude oil when it went negative and started to rebound. It really attracted a whole new breed of people to kind of trade that asset that's moving that much. And so when you look at the charts as a momentum trader, a lot of those guys are still in there just holding on, and they're riding it out for as long as they can. And because it's a momentum type move and it's got, I think, a big group of new type of traders in there, when crude does start to roll over and break down, it's gonna drop very quickly as all those kind of traders riding this trend just bail out and then move on to look for the next hot commodity. So it's going to be very interesting how crude oil moves. I think if we have COVID flare up, I read yesterday or maybe it was this morning that they've already found a new mutated version somewhere of the COVID. It's pretty scary. So when we see travel and borders tighten up potentially more, I think that's when crude's going to get hit because we're really going to see demand for crude fade again, and it's going to just have a sharp drop.
Bitcoin, any action there?
Well, Bitcoin's broken out. It's in that, it's in a new uptrend. It's been consolidating, kind of grinding its way higher. It does have the upside potential based on the last moves here to go all the way up to around 14,000, per Bitcoin. Let me just take a look at the chart here. So it has two levels to go. So the first resistance level is around the 12,500, which more or less it hit yesterday and actually this morning and reversed back down. That's the short-term upside. The larger pattern plays out to the 1,400. So we could very easily see Bitcoin chop around here a little bit, but it still has another more or less almost $2,000 to the upside to go. Now, the first move, the easy target, the first target has been hit. And I always, if you're in a trade, I always take partial profits at the easiest target for price of any asset to hit, because that's the first level where sellers could step in and reverse price on you. So you always have to scale out at a first resistance level. 12,500 is it. Hit it yesterday, it's selling down today, and we'll just see if it can hold its ground and then try pushing through it to that $14,000 next target.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.